Look at that visual truth right there. Look at it. Fight with it if you'd like. Or like me, we all accept it and we move on. It's one of those things in accounting that is just known. We're in the office here. If you look, there's the Queen Mary. There's a little logo. And get ready for this. Oh boy. Yeah, that's much better because you've seen me before. And we're talking about a very, very important concept. When we start training in tax, you saw I started with the balance sheet, the equation. Assets equal liabilities plus owner's equity. So the standard balance sheet equation is really very simple. Whatever you owe, what you have minus what you owe is what you have left over. That's the owner's equity. But I want to talk specifics within liabilities because this understanding changes what your salespeople think at the company. And I like to start with that before we get into sales or data or anything like that, which is number one, when you do accrual accounting and you take on a client, let's look at this here because we can't show you the specifics, but let's just show you almost nothing here of, well, we can't show you because it could be you, right? The point I'm saying is when you call a company and you pay them for services, most companies that you have access to look at that as the profit and then they react accordingly. It's like they're running their business off of a cash basis accounting. The problem is when we as service professionals accept that cash, it's actually a liability. It's called unearned service revenue. The term tells you what it is. It's unearned. Now, in your account, it still says cash. But really, in concept, if you follow accounting, you know what GAAP says, that's dictated by the FASB or IFRS, you know what the SEC has to follow, what we all have to follow, right? No matter who you are. If you follow that and you've taken cash, it's unearned service revenue. So the sales department, the resolution department, the lights, the office, the internet, all the bills you pay, you have the cash, but you don't have revenue. You know how you get the revenue? The unearned service revenue liability, once you perform service, becomes revenue. Now, the bank account still says X dollars, right? But the difference is you've now performed service to earn that revenue, and it transitions from a liability, bad, most times, to an asset. At that point, and at that point only, can it be somewhat looked at, as profit. So all of this has to go on before that fee becomes earned. You have to accept it. You have to perform the service. That's the key. That's where some businesses fail. And then it is credited on a balance sheet into the revenue, retained earnings, and so forth. So if you're just a tax person, because I took the test for the enrolled agent too, and you don't know accounting, then you can only do tax bookkeeping and tax work, right? Or you should. Or maybe your company is the one that takes that cash, which is really unearned service revenue, messes around a little bit, doesn't really do service, and then steals that cash. Because without the service, you didn't get revenue. You stole unearned service revenue. The reason why we have to stop and get very granular at that particular point is because salespeople, resolution, all the people in your company have access to a dashboard that shows money. But if they don't have a thorough understanding of how that money becomes something that's accessible for the whole company, which then pays everyone, then they have a misunderstanding. They see a number that they, of course, want a piece of. And I want to give it to them. Because when you earn something, it's yours. The equation says it. And Cecilia is more than an employee. She's a business partner. And the reason is because she has a specific level of knowledge after years as a chemical engineer of studying data, doing reports, testing hypotheses, and then coming to a conclusion and tweaking it. What is our system nowadays? What is everything based on? It's based on data and data analytics. So I have one of the best people in the country going to work in an industry that has been lax. Because if I tell you about some of my competitors and what they do to earn your unearned service revenue, it would make your head spin, because that's all they want. I want good people, develop relationships, help other good people, and then also come to some understanding as to, how this is supposed to be looked at. I don't think we should have to, because GAP and FASB and, they're even working on concepts now to bring it all together internationally and, across our country. That's going to be a good fight. But if you don't know these things and then bring people aboard to your company that know more than you, way more than you, and then try to come together with some understanding, you're not going to do well in the future. Also, and this is an important place to stop, once we all, the unit, Advanced Tax Services, perform services for you and the revenue is earned, the most important concept is you have been taken care of. So we start with the unearned service revenue, so we understand truly how difficult, how involved, and how required it is to perform the service to make that cash ours. Otherwise, it's sitting as an unearned liability that could potentially go back to the person that paid it. Kind of like you got to do the right thing. Good old Spike Lee would be cheering for the Knicks right there on the front row, right? Yeah. Don't let me be a Reggie Miller to the rest of you companies out there. Why don't you take their unearned service revenue?